It is the 25th of June, 2012. Let's take a quick look at the silver markets, starting within the weekly chart. And this is the first day of the week, so the gains of 2 and 2/3% are the gains as well for today. Overall, a very much neutral market, just waiting for something to happen, and it could be a decent sized wait or even further wait. The triangle is a descending triangle. This is the resistance line. The support line is that Fibonacci, second Fibonacci retracement line at 26 and a dime. We'll just say 26 even. Therefore, that's trend line. It's got a decent amount of time before it's going to come to a conclusionary phase. It's been testing the support quite a bit. However, it has yet to have taken that level out. It's still a decent away from the top part of this trend line. To me, there's nothing on this. And if you're playing this on the physical bullion game, of course, if you're new to the game, it doesn't matter for the most part what the charts are doing. It's all about entering within the accumulationary phase. Let's move this in towards the daily chart because not much is happening there. It's all wild card on here. It's going to do its average thing or its random thing, but the markets really aren't random anyway. So let's take a look at what we see here. I've talked a lot about this failed breakout, and oftentimes from failed moves can come fast moves to the opposite direction. Question is this the fast move? I would say not really, but maybe the fast move is not over yet. For now that it's had somewhat of a gain, any resistance that it happens to find, whether it's now, here, or even here, and further downside action, and if it's a decent downside move, say breaking 26 or even hitting 26, now no, breaking 26 for sure, 25.50 minimum, then it would be a fast move. And maybe we do need another washout, but it's been down for quite some time as far as duration of time is playing out. The end of February, right now it's at the end of June. That's so far 4 months for an intermediate term. Generally speaking, they last between 6 weeks to 3 months, so it's been longer than the average. And that's the shorter term chart. Let's give it more short term. Let's take a look at this high, this low, in the 5 hour. Because that's what's now going to be important within the retracement fields. The 18 average of closes is 28, highs is 28.57, and this level here is 28.60. So by the time 28.60 would ever be tested, that average of lows would be lower. But within this, I look at a chart that had a significant short-term resistance line, got taken out today, and a significantly sized gain so far that has exceeded the 18 average band. It is also still not a pierce below this level, but it's very close. I think a pierce would have to be at least to here, but it really does tell me that it's going to make a play towards this level. What I would normally be looking for within the risk versus reward is not to play now because this is where your risk is. So you're probably going to want to stop down here. You got to be right about 80% of the time to even consider that to be a play. So no thanks. I would rather wait for a 38.2% retracement from this low to whatever the high is. Right now it's here. So probably even down to 27.30ish or so. 27.28, 25, and then put a stop maybe down somewhere in here with a play to here. That would be a simple play. I would not short at that level, as I would be very unsure what to occur. I think if you were to play this short game, if you wait for 28.60, place a stop somewhere here, and then play to go towards there, the size of your loss is somewhere, say, around here. Yet the size of your profit is greater than that. So as long as you're right half the time, you're going to do very, very well in a situation like that. As it's like I say, the weekly chart is so neutral that this can just swing in whatever direction for the most part. And as far as these rallies are concerned, when it comes down to it, a clear break above this trend line And that's really in the 38, 39, 40 level right now. When we look at this from the monthly chart that was shown last weekend, this thing really has the potential to get going. But it really needs to have a significant break above what is now the 39 Fibonacci level from, of course, the $50 high and the $26 low, and above this 18 average band. It would be really, really big, because it's saying here, okay, we need a further extension lower, we need a further extension lower. Where's that to? That's to here, okay. But if it has a situation where it does 3/4 of a year going sideways, holding this level, and that's it, not having that extra decent size pullback, just decent time pullback, not much of a price pullback, and then break through above these levels, then that's usually decent sized moves. And the reason why it's not big is because it didn't go to this band. Rather, it went to this band and never broke through it. For if 26 holds, it is impossible to break down below this band. Of course, breaking down below it, that would be the further extension. But what I like about this this indicator is when it stays within it for whatever decent amount of time and then it gets above it, that means that the correctionary phase is over. For example, back here. Okay, so you're in the correctionary phase. You're breaking above it. You've established this resistance field. Okay, so now it's breaking above it. Fake move to the downside, and there's a nice up move. Of course, that didn't follow up too well, as there's a lot of fake outs within these markets, but that just goes with the territory of the game, as I like to call it. Okay, thank you for tuning in to today's video, and have yourself a magnificent week. Bye-bye.